Hey guys, my name is Gareth and welcome back to my Finance Fitness YouTube channel where I break down personal finance, investments, stock markets, real estate and help people achieve financial freedom. So if any of those topics interest you, make sure you subscribe to the channel. You can also click on the notification bell so you receive an alert whenever I upload a new video. Gold has recently been edging to all-time highs and moving closer to that $2,000 level. And now everybody's talking about investing in gold. So let's take a closer look and see what all the hype is about. So let's start with a bit of background on gold. Well, gold has been considered valuable for thousands of years, dating back to the Roman Empire and even ancient Egypt before that. It often has a sense of status and wealth associated with it. And it even still has many uses today for jewelry, for electronics and for investments. And some people like to use it for other things as well. Some of the countries that produce the most gold today is China, USA, Australia, Russia and Canada. My home country of South Africa used to be the biggest producer of gold, and they still have the deepest gold mines in the world. The deepest one at the moment is 4 kilometers deep, and that's about the same height as Mount Fuji in Japan. Now, two of the most well-respected minds in the financial industry, and ones that are often referenced in this channel, Ray Dalio and Warren Buffet, have conflicting views when it comes to gold. Warren Buffett is not really keen on gold, whereas Ray Dalio thinks it should be an important part of your investment portfolio. So what makes gold an attractive investment? Well, there are a few benefits to investing in gold. Gold has a reputation of being a safe haven asset, and so people trust that it will maintain its value as it has done for thousands of years. So when there's a lot of fear in the market and people are concerned, they like to move their money to things that they consider to be safe. Japanese yen is another example of this. And gold can act as a bit of an insurance policy to your portfolio, especially during times of financial stress or hyperinflation. And because gold is considered a safe haven asset, it can also perform really well when markets are going through a lot of volatility. This offers a great diversification benefit because it has an inverse relationship to other more risky assets like an investment in stocks. So for example, when the stock market falls, an investment in gold could perform well, and you're able to offset the potential losses you have in the stock market drop by a potential gain in the gold market. One of the common measures if an asset is providing diversification to your portfolio is to look at the correlation. And the correlation just looks at how the asset prices move relative to one another. For example, if stocks and bonds have a correlation of -1, it means that they'll move in opposite directions of equal magnitude. So if the stock market was to drop by 5%, bonds will go up by 5%. And so if you have a low or negative correlation between two different assets, you're achieving diversification in your portfolio. And if we look at how gold barely dropped in March 2020, compared to the stock market falling over 30% in just a few weeks, it shows us that gold can provide some diversification and act as a safety net to our portfolios. It can also protect us against weakening currencies. So for example, if the US dollar weakens, as we're seeing right now, since gold is priced in dollars, we'll see the price of gold typically increasing. And if we look at how the US dollar has weakened against the euro in recent weeks, we see an opposite relationship with the gold strengthening in recent weeks. And so by investing in gold, you can protect your wealth from the weakness in the currency of your country. Some people also prefer to store or keep their wealth in gold. It's something that's maintained its value for generations. It can also provide a hedge against inflation, where it protects your wealth from the eroding impact on your purchasing power due to inflation, though there have been some studies that question the validity of that claim. Traditionally, in some cultures, gold is more ingrained as a store of value. My wife is Persian, and when we got married, some of her relatives from Iran gifted us gold coins as a wedding present, which is very common to do in their culture, and we still have those coins to this day. But there are a few reasons why gold may not be the best investment. Number one is that it doesn't generate any cash flows. One of the main reasons Warren Buffett does not like investing in gold is because it's not a producing asset. Compare it to an investment in a company. That company is going to produce goods and services, it's going to generate revenue, it's going to earn profits and distribute some of that profit back to the shareholders as dividends. But if you compare that to an investment in gold, that gold does not produce any cash flows or dividends, and the return that you make on that investment is purely linked to the price of gold at that point in time. And so here's an example that Warren Buffett uses to highlight this point. If you look at all of the gold around the world, it's worth about $7 trillion. And if you collected all of it, it would form a cube with 67 feet in width and 67 feet in height on each side of the cube. Alternatively, you can take that $7 trillion and buy all of the farmland in America, which makes up about 50% of the area of the whole country, for $2 trillion. You can buy 7 ExxonMobils, which is one of the biggest companies on the US stock market, and you'll still have $1 trillion left in your pocket, which is about 4 times the size of the GDP or annual economic output of the country of Finland. Buffett goes on to say that if you fast forward a few years, those farmlands would have produced tons of output. The 7 ExxonMobils would have produced billions of dollars in profits. And you could have even invested that $1 trillion that you still had left and earned additional income. But as Warren Buffett uniquely says, no matter how much you caress or fondle that piece of gold, it just stays a big cube of gold and it hasn't produced anything. And so the return you make on your investment is entirely dependent upon the gold price at that point in time. I mentioned earlier that gold has a safe haven status, but that doesn't mean it's without risk. In fact, gold can be pretty volatile. It has a standard deviation, which is a common measure of volatility, of 15.4% compared to 14.9% for global stocks. So it can actually be more volatile over certain periods in time. Now, when you're investing, there is always this trade-off between risk and return. And the more risk you take, the higher the return is that you expect to be compensated for taking that risk. And this is where gold potentially falls a bit short, because the risk, in this case volatility, is more than that of stocks, yet the returns have been lower. So it's not really a good trade-off. It would also be worth considering other asset classes to diversify your portfolio, and this is because gold would have potentially underperformed those other alternatives like bonds. For example, bonds have interest payments through the course of their life and a known final maturity value, and that makes it easier to determine how much it's actually worth, compared to gold that has no cash flows through the course of your investment and you don't know what the future value will be, and that makes it much harder to determine what it's actually worth. So now that we're clear on what gold is and the pros and cons of investing in gold, let's see why gold is doing so well right now. Well, I've already touched on quite a few of the reasons. One of them is that the US dollar has been weakening in recent weeks. Another reason is that there's this increased feeling that the stock market is really high right now and seems very expensive. And so investors are worried about the potential drop in the stock market. And as a result, they're positioning their portfolios to be more conservative and shifting to things that are safer. And therefore, this increases the demand for gold, which further pushes up the price. So to make it practical, many may be wondering, how do you invest in gold? Well, there's actually quite a few ways that you can invest in gold. The first is to actually invest in the physical gold. This can be done through investing in coins or the gold bullion, which in today's value is worth over $750,000, and one of those gold bullions weigh about 12.5 kilograms. So by investing in gold in this way, you actually own the physical gold, but it does come with storage costs because you need to keep it safe, usually in a bank vault. And you can typically get access to the physical gold either through a coin shop or a trusted broker. There are even some online providers as well. Another way to invest in gold is through gold ETFs or exchange traded funds. Here there's actually many options because some ETFs would invest in the physical gold, others may invest in the stocks of gold mining companies, and others may invest in futures contracts of the gold price. And so if you can invest in some of these ETFs, make sure you take a look at what the underlying investments are. I have included the details of some ETFs in the description, so take a look there. An indirect way to get exposure to gold is to buy the stocks of some gold mining companies. This is a popular option because you get exposure to gold and you could potentially receive annual dividends from that gold mining company as they distribute some of the profits back to the shareholders every year. Some of the big global gold miners are Newmont Gold Corp, Anglo Gold Ashanti, Barrick Gold and Kinross Gold. In the comment section, tell me what you think of investing in gold. Is it something that you've been doing in the past? Personally, I've not been the biggest fan of investing in gold for some of the reasons I've already mentioned in this video. I previously invested in some stocks of gold mining companies in South Africa, and I later sold those stocks because I found that some of these companies have a lot of operational challenges. For example, there would be frequent strikes or protests by labor unions, and this would lead to downtime and lost production. And when you're trying to determine the value of a business, it's incredibly hard to factor in these types of events. I also find that many younger people are not as interested in investing in gold and precious metals in general, actually. So that's it for the video today, guys. I hope you enjoyed it, and if you did, make sure you hit the subscribe and like buttons, and I'll see you next week.